For over 2 decades, SINE at IIT Bombay has been the quiet force behind India's startup revolution. Inside these rooms and labs, ideas took shape, founders found direction, and prototypes became products that reached the world. This is where innovation was nurtured, where collaboration sparked breakthroughs, and where future leaders began their journey. SINE continues to empower the next generation, proving that big change always starts with a small idea and the right ecosystem.
What do founders fundamentally get wrong about venture capital?
Venture capital is not for every entrepreneur or every startup. I think many founders do not understand the limitations or imperatives of a venture capital fund. We don't invest our own money. We manage other people's money. Our fund has a limited life.
Are VCs investing in AI out of FOMO, or is it something that they fundamentally believe in? How do you look at institutes like IIT Bombay taking up the mandate of setting up a venture capital fund? What's your view on that?
I think this is a great step. I mean, I'm fully supportive of this. IITs are fortunate institutes. They've had a legacy. They're very strong in technology. You have students and professors now taking the entrepreneurial risks. You have a track record of success from these institutes.
Tell me, what were some things that were common in all these success stories that you could point out that, okay, these were the things that were common, and maybe we can make a pool of things that we should look at before investing in superstar companies?
A strong customer obsession with all the founders. The obsession with satisfying their customer needs. I'll do whatever it takes to satisfy the customer. If a woman employee has to be dropped and there's some problem with the cab, I will drive myself and pick up that employee and drop her home.
For a founder who's scaling up, when multiple VCs come in, angels are there, the board dynamics become very political. How should a founder actually address it? Good morning, Samir. Welcome to our podcast.
Thank you.
So, as you are a part of the venture capital industry for such a long time, I would like to start with asking you this question, that what do founders fundamentally get wrong about venture capital?
So venture capital, first of all, thanks for having me on your podcast. Venture capital is not for every entrepreneur or every startup. I think many founders do not understand the limitations or imperatives of a venture capital fund. We don't invest our own money. We manage other people's money. Our fund has a limited life. So only those ventures that can scale very fast to be able to list on public markets or build such differentiated IP that they become attractive for someone else to acquire are venture fundable. Venture capitalists need an exit. It's a marriage that's destined for divorce from the beginning itself. There's nothing wrong in building a business that is not venture capital funded. If you build a profitable business that can return dividends to its shareholders every year, I would think that's a great business. But
True.
Unfortunately, if it can't scale or be very differentiated, it's not a venture funded business. I think that's what many entrepreneurs don't get correctly.
Understood. But looking at the recent trends, has VC in India entered a liquidity crisis in your opinion?
So I think VC in India has always been in a liquidity crisis. I've been in this industry for 25 years. From the beginning, I've been hearing LPs ask, where are the exits? Where are the exits? If anything, in the last 4-5 years, we've seen more exits than we've seen, relatively speaking, in the previous 15 or 20 years. When I say relatively speaking, if 100 ventures got funded, maybe 15, 20 have found good exits now against 100 getting funded and 5, 10 having found good exits 15, 20 years ago. But exits remain hard and therefore this liquidity issue continues.
But is it more like a bubble in India compared to the US, where the VC ecosystem seems to be flourishing pretty well?
Venture capital is not a bubble at all. I think we should step back and understand what is venture capital doing. It cannot exist in isolation. If there were no entrepreneurs, people like me would have no jobs. There would be no venture capital. So venture capital is founded on a bedrock of an entrepreneurship mindset, entrepreneurial mindset of having people who are willing to take the risk, who have sufficient passion, determination, resilience, capability, competence to build technology ventures, scale them, and provide exits. So I think there is no question of a bubble. the entrepreneurial ecosystem in India over the last 25 years, I can't even put a number as to how much better it has become. Is it 1000x, 10,000x? I don't know, but so much better than what it was in the past. So certainly venture capital is not a bubble. We need more venture capital to fuel the entrepreneurial aspirations.
So basically, it's a bet on the founder and not on the fact that we already know it's going to be a good company, right? Why I ask this is because you see the AI, trend picking up in India as well. Are VCs investing in AI out of FOMO, or is it something that they fundamentally believe in?
Okay. So maybe I'll address this question and clarify what I said in the past. Do VCs invest in bubbles? This is a herd mentality driven business, unfortunately. And therefore, VCs from time to time do chase bubbles. And we are seeing that in AI as well. My answer was venture capital is not a bubble. Do VCs make the mistake of investing in fads and bubbles? Absolutely, yes.
So momentum cycles distort independent thinking even in professional investors. So what is your story? I mean, coming out of IIT Bombay, then going to IIM Bangalore, how did you enter venture capital?
So my entry into venture capital has been totally by chance. Maybe I'll just tell you, since you went back to IIT Bombay, when I graduated from IIT Bombay, bulk of my class went abroad. I had some issues about brain drain and this and that. I've had a free education. I should be in this country and contribute back. So I will stay back. I didn't even apply abroad. I think 90% of my EE class went abroad. But engineering was not for me. I don't think I understood engineering. The maths went over my head. I still remember getting terrified with Kreyszig and the equations. So I said, I'll do management. Went to IIM Bangalore. Did well there. But when I sat for placement, I said that I've spent 5 years in IIT, 5 years in tech. I will only apply for industries which have a tech base. So I applied only for IT industry, and sales and marketing was what I wanted. I got a job with a startup then called Computer Point. I joined that. I spent 2 years at Computer Point, then joined Wipro, spent 10.5 years there. All this was in sales, marketing, and product management. Venture capital happened as part of my stint in Wipro. Wipro and Acer had got into a joint venture for the PC business, and I was part of that joint venture from inception till the time I left. The people from Acer who were involved in that joint venture in 99-2000 had started a venture capital fund. They knew me. I had left Wipro by then, so they said, why don't you join us in the VC fund? However, I joined another startup by then called Planet Asia. And I told them, no, I've just joined this startup and I don't want to quit. And I had some stock options, and 99-2000 was the bubble for all these internet and software stocks. So I said, I don't want to chuck up those stock options. So they said, okay, fine. And I was helping them here in India, connecting them with people, any entrepreneurs I came across, because we were meeting a lot of entrepreneurs. Planet Asia was in the e-commerce and web design business, and every entrepreneur was coming to us to design their website or build their e-commerce site. When I decided to leave Planet Asia, I spoke to them as per the promise that I'd given them.
Right.
And that's how I got into venture. In fact, I'll recount the interview that happened at that time. So Mr. William Lu was the chairman of Acer Tech Ventures. He used to sit in Taiwan. He was part of the joint venture as well. He was the vice chairman of the Wipro Acer joint venture. So the interview went like this. It was set up on the phone. He said, Samir, we want you to join us. I said, yes, Bill. Bill, we used to call William Lu Bill. I'm happy to join, but I know nothing about VC. So his comments still stick in my mind. He said, Samir, you know us, right? I said, yes. He said, you know that we were in the PC business, right? I said, yes. He said, if we can move from PC to VC, you can move from PC to VC. And that's how I came. I liked what I did at Acer Tech Ventures. I really liked the job, meeting entrepreneurs, learning new things, learning new technologies. I dived deep into semiconductors, reading 60, 80, 100-page research reports and all that. There was no Claude or OpenAI at that time. So I read all those research reports, made myself up to steam on areas that I knew nothing about earlier. When Acer decided to stop investing, I liked what I did. So I said, I must continue in this profession if I can. And so I teamed up with the other partners at Inventus. 3 of us raised this fund, and this has been my journey.
So as we can see, the best investors emerge from repeated exposure to business decisions and mostly sales. Understood. So tell me about those days of venture capital. I mean, I'm sure I've never heard that word venture capital back in those days. So how was it like? What was the experience like? How were founders more different in that era versus now? Or let's say, how did you judge companies? So give me a brief of how venture capital was in those days.
So I think it was a very nascent industry. There were 15, 18 funds that were investing. Angels were just beginning to come, but the angel ecosystem was not involved. At that time, founders probably were not mature enough to, tech founders I'm talking about, not mature enough to understand what it takes to build a business, scale a business, etc. Like I said, today's founders are 1,000 times better than, or more mature than what we saw then. So we would, and because the industry was so nascent, so new, so small, it wasn't stratified. Today you have angel investors, you have seed funds, you have Series A funds, Series B funds and all that. But that time there were just 15 VC funds doing whatever. So a lot of entrepreneurs would come to us and say, I need 25 lakhs, whereas my minimum check size was $1 million and so on. So those were the mismatches because they didn't have angels to go to. Many founders were in love with the technology and idea and didn't really relate it to the market or customers or spend time to understand customer needs. It was an alien concept at that time. So it was an immature ecosystem, if I were to use the word. VCs were also immature. I think our ability to understand what works, what doesn't work. If I look at my own journey, I was a very prescriptive person in my first few years, which was a huge mistake. VCs can't be prescriptive. VCs have to guide. You have to show options to the entrepreneurs, but let them make their own choices.
Yes.
And so I think over time, this messy, immature system has evolved into a beautiful, maturing ecosystem. I can't say we are fully mature yet. We still have a lot to learn and lot to do to become mature, but we are far better than what we were then.
Right. I think the founders of those era, I mean, there must be a difference between them and now. I think there is more volume now, but would you want to comment on the quality of founders that you found in those days?
So I think there were good founders then as well, but like I said, they were a much smaller percentage of the total entrepreneurs we would meet. And when I say good, I'm not saying good or bad in a value judgment point. It's how well did they understand customer needs? How well did their product translate to what the customer problem was? Those were missing gaps. So that is more or less not an issue in today's environment. Also, founders know which funds to approach for which stage of their journey and so on. Most founders have understood that venture capital is not for all types of businesses. So I think overall significant improvement in the quality of founders and the percentage of founders you can back. Understood.
So since you're part of the IIT Bombay ecosystem, how do you look at institutes like IIT Bombay taking up the mandate of setting up a venture capital fund? What's your view on that?
So I think this is a great step. I mean, I'm fully supportive of this. IITs are fortunate institutes. They've had a legacy. They're very strong in technology. You have students and professors now taking the entrepreneurial risks. You have a track record of success from these institutes. SEDIMAC is such a clear professor-led startup that has become successful. Student-led startups. Ankit has done IdeaForge and it's listed and successful. Atomberg will go out, ImmunoAct, and so many examples.
Right.
This is absolutely the right time to set up a fund to back those entrepreneurs that SINE sees. You don't have to back only your own entrepreneurs, but you see hundreds of these deep tech entrepreneurs. And deep tech, this is India's time, this is India's moment, and I think we need to seize it. And therefore, this is the right time for a fund from SINE and IIT Bombay.
So what we figured is deep tech ecosystem need institution which are more inclined towards making an infrastructure for innovation and not for placements. Right. But was Ypoint, the IIT Bombay venture capital fund, was it more of a push from the government or because I see that RDI scheme and all these new funds initiative coming out from the government, was it like an accidental thing or like was it
No,
planned?
not at all. So the topic of a fund had come up 8, 9, 10 years ago. And at that time,
10 years ago in IIT Bombay.
in IIT Bombay, 2017-18 timeframe, the team at SINE had felt that maybe it's time we raise a fund because our entrepreneurs are not getting that early stage funding and things like that. At that time, most of us associated with the SINE ecosystem felt it is too early to do a fund.
Right.
But 3-4 years later, 3-4 years ago, maybe in 22 or 21-22, the idea came up again. By then, we had seen Idea Forge List, we had seen Gupshup becoming a unicorn, we had seen Sedimac growing so well, and we had seen so many other success stories coming out of SINE, and the way they had incubated companies, invested small amounts into those companies. I think unanimously, everyone felt that the time is ripe to do a fund now. I think the Y Point fund predates RDI and all that.
Okay.
I would go out on a limb to say that people saw Y Point happening and said, okay, let's set up a fund to support it.
Support.
Of course, I'm kidding, but
The vision is large. The best VC funds, they shape ecosystems and not just their portfolios. That's wonderful to know. So how do you see IIT Bombay and Y Point blossoming? What's your view with setting up Y Point? What do you want it to achieve, let's say, 10 years down the line? What kind of impact should be there?
So I'm going to answer as a dreamer now,
Yeah.
not as someone associated with Y Point in whatever way and things like that. So 10 years later, what I would really like to see happening is Y Point has backed some deep technology companies that have made a global impact, solved some real problems or met some strong customer needs. Given IIT Bombay a name that's, today no one questions Stanford entrepreneurship initiatives,
Absolutely.
MIT. I would like Y Point to put IIT in that league, that we are no less than a Stanford and MIT. Look at the companies that we produce, global scale impact, global nature technology problems, deep technology, fundamental innovation. That's what I would like.
Right. I mean,
And of
there
course,
are
wealth
some.
creation in the process.
So long-term institutional impact is far deeper than your short-term valuation milestones. Being them incubate, and then subsequently, if they make it, then the fund is there. What other initiatives you feel that could come from the the management or from the government side, which would help blossom this ecosystem much more?
So I think this is a good start. Instead of getting into more initiatives, I think my thought is that all the stakeholders around this ecosystem should make this successful. It's very early days of a fund.
Right.
Funds take 10, 12 years. Most first funds don't do very well. It's the second fund and third fund in which the fund managers mature, the whole process matures, the whole ability to identify and work with matures. So I wouldn't look for more initiatives at this point in time.
Right. But given the strength of the alumni, 70,000 odd alumni, I think there's a lot to take out from the alumni as well. And as far as I'm aware, Y Point is doing a lot of things in helping out their portfolio companies in terms of matching them to the right alumni and helping them commercialize. What's your view on that?
So I think leveraging the alumni network is a huge strength that IIT has compared to other VC funds that don't have that advantage. You have this 70,000 alumni that you can reach out to. And being an alumnus of IIT Bombay myself, I can tell you that whether we've graduated 10 years ago or 40 years ago, you have that connect with the institute. You're ever grateful to the institute for having put your life on a certain path and your career on a certain journey. And we are more than willing to help, give back. So if Y Point reaches out to an alumnus saying this portfolio company of mine needs this support in your company, more than enough people would be willing to help. And that's your unique advantage.
Yes.
When you pitch to entrepreneurs to take your money, this is why they should take your money. Not just the technology guidance which you can do, which is a great asset,
Right.
but also this network.
Wonderful. So let's go back to the days of inventors. What were your learnings working with Mr. Kawal Rekhi, starting a new fund which was very niche at that point of time? And I think you treat him as a mentor when it comes to venture capital. What did he, internalize in you over the years working with him?
So I've learned many things from Kanwal. I'll probably try and, classify them and then give examples of each. So the first thing I learned was being transparent and open. It doesn't matter whether you've done well or not well. And the example I'll give is, so our first fundraise was very tough. We were aiming to raise a 100 million fund. I think Inventus ended up at 52 million. I was a little, if someone asked me, have you raised your fund? Yes, we have. Have you met your target? Well, not, but we are almost there. And, I would sort of obfuscate the issue. I didn't want people to know that we are at half our target.
Right.
And then I was with Kanwal and someone asked him the question and his answer shocked me. And that I learned from that shock. He said, oh, we had a terrible fundraise. We were trying to raise 100 million. We were only at 51. We almost gave up in the middle. But then, when we got 50, we said, okay, let's try and prove ourselves. Let's do a great job and go out and try and raise a better fund too. Then I realized, what was I obfuscating? What was I trying to hide and feeling ashamed about? Fundraising is tough. I should acknowledge it was tough. We didn't have a great first fund.
But that kind of honesty helps in venture capital?
Oh, it helps in every aspect of life. There is no question about it. Because you can fudge, you can obfuscate, you can put a sheen for some time. Smart people ultimately break through it and get to the reality. So this honesty works everywhere. So this was one aspect I learned from him, which was openness, transparency, complete honesty. The second was as a VC myself. So I had been an investor for a few years before Inventus happened. And Kanwal joined one of my board meetings in an Inventus investee company. And after the board meeting, he came and told me, Samir, you're a terrible VC. And I said, why? He said, you were so prescriptive. You were telling the entrepreneur, no, you should not do this. You should do this. Why aren't you doing this? What did you do about this? Why didn't you do this? He says, that's not your role. Your role is to put the options in front of the entrepreneur, paint the pros and cons of each of those options, and let the entrepreneur make the call. You have to nudge him to think in a certain manner, but this decision is always his or hers. And you should realize that you don't know everything. The entrepreneur knows more about his market, his space than you will ever know. And so be humble. And that's another big lesson I took. And I realized then that, I was an investor in a company from Acer Tech Ventures where the entrepreneur was very techie. He knew nothing about marketing. And I had come from a 15-year sales and marketing background. And when I look back, I was so prescriptive and so horrible. So that's another huge learning that I had from Kanwal.
But wouldn't you say that being a VC who's seeing things across domains, across industries, it would be actually good to be a bit prescriptive? Because what I feel is, if you are not guiding them in the right direction, at times they are too attached to certain things, or they feel that they are too involved in their stories, right? So what's your take on that part?
So I think that's where our assessment capabilities come into play. You don't back an entrepreneur who you feel is in love with his idea. Your job is to assess before you make that investment. Is this person coachable? Is this person someone who would listen? Is this person someone open to new ideas? That's our job. We are failing in our job if we don't identify these aspects. Of course, we can get it wrong a few times.
Right.
But if we do a good job in looking at some of these things, chances are we'll get it right more often than wrong. Right. But having backed an entrepreneur, I think we cannot dictate their vision, their dream, etc. We have to guide, but we can't prescribe. And that's the fine line we need to learn.
Yeah, makes sense.
How do you guide a person? How do you show the pros and cons of the options in front of them such that they make a decision which you believe is right? But I think we should also have the humility to know that if they make a decision that we at that time believe is not right, maybe there is wisdom and we don't know enough.
Right.
I'll give you examples again. We were investors in a company where we ended up with a write-off in that.
Okay.
But about 3-4 years into that investment, the entrepreneur said that I'm reaching a global maxima and I think we should sell. And he had an offer to get acquired at that time. And everybody around, not just we, there were other investors also in that, and blue chip investors as well in that company. Everyone said, no, what is this global maxima stuff and all that? No, there's so much more potential. We need to build, etc., etc. And so we rejected the offer, continued to sort of build, raised another round, which happened because that sector was hot. And ultimately, we didn't make money. Had we taken that sale, we would have made 4 or 5 times return on our investment.
Right.
So I think we should also have the humility to know that we don't know everything. Sometimes the entrepreneurs know more.
Right.
But then it works the other way also. I'll give that example. Another of our companies, which has been a phenomenal success now, in 2016, so we had invested in 2014, 2016, they were raising their Series B. Unsuccessful. They were not able to raise the Series B. Obviously, the entrepreneurs got distressed, and nobody likes not being able to raise a fund or failing in fundraising and all that. And they got an offer to get acquired, unsolicited, but they got an offer to get acquired by another company. It was a very low ball offer. In general, my belief is that if the entrepreneurs want to sell, there's not much you can do to sort of continue to run or change their minds, etc.
Right.
That's my general belief. But here I went against our belief and with the other investors as well. We told them that I think you should not sell. This is too low ball an offer. We bridged them. So we said we'll put money behind you because we believe in that idea.
Right.
And today it's a phenomenal success. We are already sitting on at least 22 times return on that investment. And I think there's an upside for at least 2x more. We'll end up making 40 or 50 times our money. So now what do you conclude? On one side, I said you should listen to the entrepreneur. When they said global maxima, we should have done it. On the other side, I'm saying there was an offer. We would have made 2x our money. We told the entrepreneur not to take it.
Right.
There are a lot of unknowns in this business is the only thing I'll say.
The best VCs balance emotional empathy with financial discipline. And the ratio becomes better and better with experience. Absolutely. So destiny is destiny, whether it's venture capital or life.
Yeah.
Completely. So tell me more about your learnings from investing in, you have a star-studded portfolio like Redbus, Savari, there's Policy Bazaar,
Move and
right?
Sync.
Yeah. So tell me, what were some things that were common in all these success stories that you could point out that, okay, these were the things that were common, and maybe we can make a pool of, things that we should look at before investing in superstar companies.
So I think there are many things that were in common, but I'll start with the absolute tying factor among all our successful companies was a strong customer obsession with all the founders. I'll give you just some examples. Redbus, right? Now, I'm taking you back to 2008-9. Internet was very new. Today you order something on Swiggy, it'll come. You paid in advance. You don't worry that, will it come or not come.
Well, our coffee came 15 minutes late, but then, yeah.
But you know that you'll get a refund if it doesn't come, right?
Yes.
Those days, booking a bus ticket, you took a chance, booked it on Redbus. You didn't know when you went to the bus operator whether he would honor that ticket or no and things like that. And that actually happened in one case. So
right.
A customer who had bought a ticket on Redbus went to the bus operator. Bus operator said, "No, bus full hai. I cannot take you." The Redbus guys booked an air ticket. This was Bangalore, Hyderabad. Booked an air ticket for that customer. Drove on their bike to Kalasipalayam bus stand where that customer was standing. These are night buses, 8 p.m., 9 p.m.
Yeah.
They booked at 11:30 p.m. Air ticket for him out of their own pocket, gave him the air ticket and said, "Go by flight. Sorry about this." This is customer obsession. Policy Bazaar. This industry, insurance, had a lot of mis-selling. People were sold products that they never needed and all sorts. Yashish started Policy Bazaar with the mindset that I will only do what is right with the customer. Move and Sync. The obsession with satisfying their customer needs. I'll do whatever it takes to satisfy the customer. If a woman employee has to be dropped and there's some problem with the cab, I will drive myself and pick up that employee and drop her home. Thankfully, they didn't have to do that. They sent somebody. But that's the obsession. My customer must never get let down at any point in time. Same with Savari. I mean, Savari, which was into intercity car rentals, it's a very operation-heavy business.
Yes.
Prone to a lot of disruptions and issues.
Right.
But the obsession to make sure the customer is never let down, I think was a common trait. And then the other common trait, I know I've gone too long on this, is the determination and resilience. All businesses go through ups and downs. It's resilient founders that are able to bounce back from the lows of a business and then see it becoming successful. So I think all were resilient. All our successful investments have been very resilient.
So one more thing I wanted to ask, you see very few successes in VC and there are so many failures, but you root for certain people, right? That, okay, this guy is doing the right things, but it's not happening in the right way. So share me on a no-name basis some of those incidents that really, shook you in terms of companies trying their best, but still not making it. And then how the founders reacted, how much entrepreneurship makes or breaks a person, if you can share some incidents or stories on that.
Yeah. So it's not easy when a venture doesn't succeed. But I think the message that at least I keep giving all the founders whose ventures have not succeeded is that it's not your failure. Your venture did not succeed. Your venture failed. You didn't fail.
True.
And these lines motivate me. They are from In Memoriam by Alfred Lloyd Tennyson. It's a long poem he wrote, but these lines are very important at such a time. Blah, 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 blah. I'll hold it true whatever may befall. I hold it when I sorrow most. It is better to have loved and lost than never to have loved at all. And I just twist it to say it is better to have tried and lost than never to have tried at all. So to me, the entrepreneur who takes the step to become an entrepreneur, that itself is a very noble thing.
True.
And that is itself a very great thing in my mind. Then whether the venture succeeded or no, the entrepreneur has never failed. And this is what I tell entrepreneurs whose ventures don't succeed. And we've backed a couple of our entrepreneurs who we had invested in, it didn't work out, they did another startup and we've gone and backed them again. Because we felt that the startup didn't work out, not because of their issues. In some cases it has worked out because we made a wrong founder choice.
Right.
There we'll not go and back them again. But where we believe the venture didn't work out for other reasons, market issues, technology issues and so on, we've backed founders second time.
In my conversation with you, you've sounded like there's a lot of emotion attached when you're managing your portfolio. Do you get attached to your founders or the companies?
So the answer is yes and no. Okay. As I said earlier, investing in a startup, VC investment in a startup is like a marriage destined for divorce. 15 years back, I wrote an article in Economic Times where I said that chemistry between the founder and the investor is also very important for success of a venture. Just like chemistry is very important in a marriage.
True.
But unfortunately, this is a marriage where the prenuptials have been written saying we will divorce in 7, 8, 9, 10 years' time. So, yes, you get emotionally attached, but you're also telling yourself all the time that you have to detach because you have to end this journey at some point in time and so on.
Yeah.
And when journeys end, they are emotional, especially when they are, very successful and so on. And I've written some posts. When Savari got acquired by Make My Trip, I wrote a LinkedIn post where I summarized my journey and my respect for the entrepreneur as he showed so much resilience in his journey.
True.
But in spite of being emotionally attached, you have to be detached. You have to make non-emotional decisions. You can't put good money behind bad. If something is not working out, you have to tell yourself, this is not working out. Samir, we need to move on. Have that dialogue with the entrepreneur and cut your losses.
Right.
That's part of this business. It's not easy. We are all human beings. We are all emotional. Emotions drive a lot of our behavior in life, not just in venture capital. So it's hard, but it has to be done.
Right. So I'll ask you a tough question here. who is more important, the LP or the entrepreneur?
It's both. It's both. There is no plus or minus.
Yeah.
So, I say that our job as venture investors is a sales job. We would not have a job if there were no entrepreneurs. So, ultimate respect to them. They are the reason we exist. And I'm not facetious about this. I'm very serious about this. They are our first customers because they have given us the job. LPs are equally important. If the capital was not there, entrepreneurs are there. How will I'm the bridge between an LP's capital and the entrepreneur's needs, right? If the LP capital was not there, how would I bridge this needs? If the entrepreneur was not there, LPs can give me money. Where will I invest? So both are equally important. We are a middleman who has two wives.
I'm sure
you have to
you're
learn to enjoy both.
makes a lot of sense. Wonderful. So coming back to the founders and the companies, how do you validate whether an investment is worth doing or not? Because you come in at Series A relatively early, right? And still, I mean, there is some kind of validation coming from the market. But for an asymmetric return, there's a lot to be done, right? So what is the process? What's the secret sauce that Samir Kumar uses?
Then Samir Kumar, it's what Athera uses. I think I've been guided a lot by my partner Parag and I've learned a lot from him as well. We spoke only about Kanwal, but Parag is 33 years of VC investment experience and I've learned a lot from him in terms of the process. So ultimately, it is a bet on the founders and the founding team. So we spend a lot of time trying to understand if this is the founding team we want to back. And what does that mean? I mean, do they have the competence? Do they have the capability? Do they have the staying power, the resilience, the determination, the passion, fairness, integrity, sales ability? Because even if they are not salespeople, you have to sell to get your first employees. You have to sell to the VCs to get your funding. You have to sell to your first customers yourself. So we look for all these things and first convince ourselves, yes, this is a founding team I think we should back. Once we come to that conclusion, then you do the next steps, which is this market large enough? Can I get VC type of returns in this market? Is it too crowded or are there not too many players? Does this value proposition have sufficient differentiation from the other players in the market? And do I see an exit in my time horizon that I have?
True.
And we also add a capital intensity filter. Is it going to need billions of dollars before it gets to a certain, exit? Like the LLMs, right? They are raising billions and almost they end up raising trillions of dollars. That's not for people like us, small funds like us. So these are the things we look at. But first and foremost, the founding team, and then that's the gate. And then we say, okay, all these other things.
Understood.
And the way we evaluate the founding team also, at least my mental principle, and this is mine, at every meeting, I look for a way to say no. So I take the first meeting, someone has referred or a plan has come in, which I liked. I took the meeting, but I'm trying to find a way. This is why I can say no, or this is why I can say no. If I don't find a reason to say no, I take the next meeting and I take the next meeting. And if after a series of meetings, I find no reason to say no, that's when it becomes a yes on the founding team. So that's my mental framework.
Right. As we can see, great mentors compress decades of knowledge and wisdom into simple, meaningful insights. So when you talk about the team, does meritocracy and network still dominate venture capital decisions? Because we keep hearing about, this guy's from IIT, this guy's from IIM, let's back the founders, right? We also have funds coming out of India who go to specific colleges and they just write checks based on their rank in the IIT or, their GPA, and all kinds of things are happening. What's your view on that? Because somewhere I feel that grit and determination to succeed is a lot because of the failures that they have had in life, and I think that dominates over, let's say, a meritocracy based approach towards a venture outcome.
So I don't agree with your usage of the term meritocracy. Just because I came from IIT and Samir, came from IIT, doesn't mean I'm better than someone who came from VJTI. I don't believe that. Okay. And like I said, engineering, I'm a very poor engineering student. So I don't think that's meritocracy if I back an IIT and I think at Athera, we've consciously stayed away from that. We look at founders and we evaluate founders based on the things that I just mentioned.
Right.
Their determination, passion, grit, resilience. And you made a very important point about failures. So like I said, in our own fund, 2 of the founders we've backed second time were people who didn't work out in the first time. And in fact, Kanwal has this saying which he's drilled into us, and I tend to agree mostly with him, that a very successful founder is not a good second time bet. Because the way he describes it, what happens when I did a venture, I went through all the struggle and I became hugely successful. So my life is set. I now go for foreign holidays, I buy the best car, I have a huge house, my family's lifestyle is upgraded and all that stuff. Not that everyone needs to do it, but typically that tends to happen. And then I do another startup. And then, my wife tells me, hey, why aren't you going on that holiday? We should be going. We used to go 3 times a year now, etc. So his view was that super successful founders don't make good second time bets. It's not a universal rule, but we have not backed a super successful second time founder.
The most memorable founder stories are about how they react under pressure and not about the eventual outcomes. Right. I would like to quote one very important thing which has been with me for a long time now. It's in the Batman trilogy, the 3rd movie. Batman was at his peak in the 2nd movie, and in the 3rd movie he faces the villain that is Bane. And Bane tells him when he's beating him down in the pit that success has made you weak. And I think that is what you are referring to. And then eventually Batman had to, take the curve up and then, beat his nemesis. So yeah, I mean, success does make people weak, and it takes a lot of resilience to actually, be successful again and again and to stay grounded.
Correct.
And I think staying grounded is one of the values that I keep learning from you in each meeting that we have. And where did this humility ingrain in you in terms of your experiences across the 4 funds?
So, first of all, thanks for saying that I have humility. I don't know if everyone will agree, but yes, by and large, Athera, if you talk to people, is spoken of as a fund where, the people are grounded, we are not arrogant, we are not flashy. People describe us as WYSIWYG. What you see is what you get. I think fundraising is a very humbling experience. When I got into venture capital with Acer Tech Ventures, I did not have to fundraise. But I had seen the arrogance of VCs in my previous Planet Asia stint. And maybe I'll just give an example of the arrogance I saw. I won't name the VC. But if someone goes to Gemini and says, who were the investors in Planet Asia, they'll know. But I was a chief marketing officer there. And these VCs used to come for quarterly board meetings. I'm taking you back to the 99-2000 .com boom era when things were just booming. If you traveled from Mahim to Bombay airport, you would see hoardings of .com companies. Steel companies were adding .com to their names. So Boruca.com, I'm just giving that example. I am not saying Boruca added, etc., etc. But so I was chief marketing officer. In the board meetings, these guys would come and grill me. We were doing very well. We grew from $2 million to $14 million next year. We blew all our targets, etc. But we did not have hoardings and all that. And these investors would come and say, Samir, why don't you have hoardings and all? And I would say, we don't need those hoardings. But what is your marketing budget? I would say it's so much. How much have you spent? This much. Why aren't you spending? I said, because we have 500,000 customers to address. I don't need hoardings. I can reach them through more cost-effective means. No, you don't get it. Everybody is doing this. First meeting, this happened. Second meeting, this happened. Third meeting, when they said, no, you don't get it, I also got upset and said, if I don't get it, get someone who gets it. I'm happy to go. So first thing I realized, and maybe that's driven part of my humility and so on, is don't be arrogant with entrepreneurs. They know much more than you. And I wasn't an entrepreneur there. I was only a chief marketing officer. I was a hired person. But as an investor, I will never know as much as my entrepreneur knows. They have spent their lives in this space. I have spent some time in this space. Yes, I've read 100-page research reports and all. But that's not equivalent to spending 3 years of my life day in and day out. So that was one. And I think this shaped a lot of my thinking that I should not talk to entrepreneurs on things that they know better, etc. I should not harangue with them and things like that, although I did some of it. Also, this value add question. A lot of VCs say we add value and things like that. The same investors, I was also looking after Hong Kong sales for the company. I would go there every month. They were based in Hong Kong. They said, oh, you meet us and whatever help you need. Hutch was a customer of ours. Li Ka-shing was the owner or founder of Hutch. The group, not the telecom company.
Understood.
And so they were our customers. I said, I need to meet the CIO. So when I went there, I said, can you help get me a meeting with the CIO? And their response was, Samir, no problem. We'll get you a meeting with Li Ka-shing. I said, no. I don't even know what to talk to Li Ka-shing. I need a meeting with someone 7 layers below him.
Right.
No problem. We get you with Li Ka-shing. You can work your way down. I said, okay, I'll meet Li Ka-shing. I'll be very happy to meet Li Ka-shing. I can boast about it. But neither Li Ka-shing happened nor CIO happened. So I learned empty promises are also not to be made. True. The third was on arrogance. So when I got into this industry, I knew nothing about venture, right? So I went and met a lot of venture capitalists. I met Parag in that process. And that's how, he became part of our team later when Inventors happened. And we worked together now for 18 years.
Understood.
People like him were very generous with their time, their knowledge. Kanwal I met in the same context, and he was very generous with his time and context. But there were people who kept me waiting for 45 minutes. I had an appointment, waited 45 minutes, and then not even a word of apology that, sorry, we kept you waiting and all. And I'm waiting at the reception, not knowing whether the meeting will happen or no. So when I started Acer Tech, a few months after Acer Tech Ventures, and in Inventors, we internalized this. No entrepreneur should wait for even a minute if we can help it. If they come on time, we should start the meetings on time. And we've tried to adhere to that. Every entrepreneur should hear back from us. I think 99% of the people hear back from us. We are not a black box where their mails come and don't go answered. Yes, 90% of the time, 95% of the time, it's no. And we don't necessarily take a meeting with everyone who writes in, but they hear back from us. Every entrepreneur who's met us and we are not moving ahead needs to he has a right to hear our reasons or our mindset as to why we are not going ahead. If he's met us, everyone who writes in, we don't give reasons all the time, but at least people who've taken the trouble to come and meet us should know, why we are not going ahead.
True.
I think these are some of the things that have shaped my experiences. But one line from Rudyard Kipling's poem. Have you read the poem If? No. I think every VC must read it. Okay. The poem is If, and it's Rudyard Kipling addressing his son. And he says, if this. And the last lines are, then you will be a man, my son. But I think in his mind's eye, he had an entrepreneur, and he meant to say, then you will be an entrepreneur, my son.
Okay.
One line that has resonated, many lines have resonated, and I've quoted them in many of my posts, but on this humility bit, if you can walk with kings, yet not lose the common touch, right? That's one of his ifs. And that has been a guiding principle for me. So in Bangalore, I travel by buses. I was on the TIE governing board. And the executive director of TIE, after a TIE governing board meeting, saw me at the bus stop. And she said, what are you doing here? I said, I'm waiting for a bus. How can you travel by bus? You are a VC, you are a MD in VC. I said, but I'm a human being. So for me, all this doesn't matter.
It's so lovely to hear. Because we keep hearing from entrepreneurs every now and then that, VCs are very transactional. When the hard time comes, they are just vanished. They're no more there in the picture. They don't pick up calls. So what has been your experience? Give me a couple of instances where the company was going through a very rough time and your, hand holding or those, just the small gesture of picking up a call in a distressed time and helping them out had made a difference, in smoothing their journey.
Sure. I'll give the Savari example because it is most top of mind in my mind. So I talked about Savari 2016. I talked about Movin Singh. Maybe I didn't talk about Savari, but
Savari,
Savari was the
yeah.
same thing.
Yeah.
We invested in 2013 Series A. They raised a very successful Series B in 2014. They were raising a Series C in 2016, failed because Ola and Uber by then had come in. They were pouring tons of money. And even though Savari did not compete with Ola and Uber, VCs bracketed them in the same space. Your cars, your car for hire and all that. And they were not able to raise money. Obviously, the entrepreneur was very unhappy, and no entrepreneur likes a failed fundraise. So he was at a very low at that time, but we felt that he was doing the right thing. His business did not compete with Ola and Uber. There was a great market in outstation car, a great opportunity to organize the outstation car rental market. So we said, we'll bridge you. Of course, you cut costs and so on. And we gave him a bridge. He had some money left. He was burning money at that time. He cut costs, took our bridge, but didn't touch our bridge. So his cash balance kept dwindling till it came to almost the money we had put in. And then he became profitable and started adding to his bank balance. And then COVID happened. The second time you get smashed on your face. First time you didn't raise money, weren't able to raise money. Second time for no fault of yours. You've built a profitable business, it's growing beautifully, and COVID happens. Your revenues come to zero. Not you decline 50%. You're zero for 2 months.
Yeah.
Nobody was traveling. It was a lockdown and all that. So I think that's where we played a role. So we said, don't panic, don't get distressed. And while I was panicking inside, I think full credit to the entrepreneur for his resilience. In his place, I would have given up. But we got into almost twice a week calls at that time. There were calls because we couldn't meet in person, and strategizing what to do, how to cut costs, how to survive. Let's look at our cash on a daily basis. So I would get daily cash balance reports from them. Of course, from a profitable business, it became loss-making, etc., etc. I think he did a fantastic job, and he still credits us for some role that we played there. In fact, when he exited to make my trip, I wrote a LinkedIn post, and I said that, he went through tough times. And one of the lines from If Again is, if you have the will to hold on, and many other things, but if you have the will to hold on. And he wrote in response that, Samir, I think it was your belief in us that gave us the will to hold on. I was touched by those lines, right? So this is just one example. We could have said, COVID has come, shut down the business, right?
Yeah.
But we didn't do that. We saw that he had put in so much of effort, and it was a great outcome at the end of the day.
Right.
Movin Singh went through a very similar thing. Today, it's a fantastic company.
Makes sense. But this is also for my learning. What are some founder traits which seem to be very impressive, but are actually red flags, which you should be aware of?
So, again, I'm going to answer it, but I'm not saying I'm necessarily right. Okay. We don't like flashy founders. Okay. So if a founder is just...
Let me stop you there. Would Elon Musk, if he pitches to you,
No.
would you take that?
No. And that's why I said no right and wrong. No right and wrong. Right?
Absolutely.
But we wouldn't do it. It doesn't suit our DNA. It doesn't suit our thing. And Elon Musk is hugely successful, and our Elon Musks are also successful in
Right.
raising money and all that stuff. So, but I'm just speaking from our perspective, right? And like I said, there's no right and wrong.
Why does it prick you? Let me go deeper.
Because at the end of the day, if you are in your flights of fancy, you tend to lose touch with reality. And in my head and in our heads, being in touch with the reality, being in touch with the market, being ability to listen to your customers, employees, stakeholders, you lose some of those things when you fly in the air. And I think listening to all these people I mentioned is extremely important. We underrate listening as a skill in our own lives and so on, but it's extremely important.
So for a founder who's scaling up, when multiple VCs come in, angels are there, the board dynamics become very political. How should a founder actually address it? Is it really a bottleneck for them? Do VCs make it a bottleneck? How does the whole dynamic go?
So I don't think VCs it does become an issue at times as companies scale to DE and so on. New investors come in with different perspectives, and it does become an issue. I think nobody tries to make it an issue, but there are sometimes conflicting perspectives, conflicting opinions on how the business should go.
be done. Yeah.
I think one of the things that early stage investors, people like us who've been with the company for many years by then, do and need to do, and I've seen, not me, but my partners do it very well. And it's Parag who's done it very well. Understand from the founder what is troubling them, and then speak to the other investors one-on-one and gently convey that, probably this is not working out and maybe this is how we should be doing it. So I think our role changes as early stage investors from just working with the founder and helping them to grow the business, etc., to also becoming a bridge between the later stage investors and the entrepreneur, because we've known them the longest. And maybe on a slightly lighter note, we understand the early stage business very well.
True.
We can contribute a lot more to the entrepreneur at that stage. Now when a business has scaled, it's 1,000, 2,000 crore business, profitable. Other investors can do more. I have more time. And maybe I can play that bridge more successfully.
True. But are the founders generally right about the way the business is run, or like later stage investors have more insight? I just want to understand the perspective, because for a later stage investor, the multiples need not be that fancy, right?
Correct.
And they have their vested interests. So they may try to guide the founders, or for a lack of better word, shove the founders in a certain direction. So where do you think, having seen these journeys multiple times?
No, but that doesn't misalign with the founder or with us. So we have a 10x return multiple at the time we get in. We should be able to see a 10x return, not that we get it every time.
Is that a metric in mentally?
That is a hard metric, metric. If I'm not able to model a 10x return in a 5-7 year time, so we actually do that exercise. How much are we putting in now? What stake are we getting? How many rounds do we expect the company to raise before it gets to profitability? What dilution do we expect? What exit valuation do we see? And do I see a 10x return on my investment or no? And no matter how great the company, if I can't see that 10x, we don't invest.
True.
But so when a late stage investor comes in, like I said, we got into Policy Bazaar at 27 million pre-money, 32 million post. Then rounds happened at 1.5 billion, 2 billion. So for that investor, 2x return is great. They're putting in 300 million, they'll get 600 million in 3 years' time.
Right.
Great for them. And for me, my 15x becomes a 30x. So we are aligned. And for the entrepreneur who started with 0 million valuation, 4 billion is great. So I don't think there's any major misalignment or anything. And at least my experience of later stage investors is we tend to be a little more operationally working with the founder, right? On operational issues and things like that. They tend to be very financial, and that's a big value add for the entrepreneur. Most entrepreneurs, first time especially, have not done an IPO
Absolutely.
before. Most VCs have not seen IPOs in their portfolio.
True.
So later stage investors who've done a lot of IPOs, etc., bring that
Knowledge,
value. And we're
yeah.
seeing that in one of our companies. They've raised a Series C, and the Series C investor is bringing in phenomenal value add in this whole IPO process as they've started their IPO journey. Value that or contributions that I wouldn't have been able to make.
Right. That's a fair point. So let's get into another section of fundraising. We have talked about entrepreneurs raising funds, but how is it for VCs to raise their fund? Because that's another story, right? At the entrepreneur's end, you have a product, you have an idea, you have a story to sell, right? But let's say a VC who's coming out who doesn't have a background, right? Who's doing his first fund, or even let's say a VC who has done his first fund, but the markups are there on paper. How difficult is this journey? And I think you've mentioned it earlier also that fundraise is one of the most humbling things that a VC can do. So throw some light on that. How is fundraising for a VC?
So irrespective of what anybody says, I'll say fundraising is a very, very tough journey. That's been my experience. Sure, there have been other VCs who've probably raised funds just like that and very easily and very fast. more power to them, kudos to them, but that's not been my experience. I've had a failed fundraise behind me. Between Acer and Inventors, I had teamed up with another team. We were looking to raise a small fund. We were not successful in that journey, but I still continued in venture capital. My family at that time told me, Samir, what are you doing? Take a job. I said, no, I love what I'm doing. Let me give it another chance. So we are also entrepreneurs in almost every sense of that word, even though we manage other people's money, but we are entrepreneurs. The first fund is always the hardest because unless you've been an angel investor or you worked in other funds and have got a track record in that sense, like the Sequoia guys coming out and the A91 guys came out from Sequoia and the Stellaris guys came out from Helion, they've got experience in VC. So I don't strictly call them a first-time fund. But at Inventors, when we started, Kanwal was a prolific angel investor, no institutional experience. John and I had some institutional experience, but that was not enough to say that we had great track records and all that. It was very small.
Fair.
So the first fund is always the hardest. You are selling hope, you're selling promise, you're selling your own selves, you are saying, that I understand this, I can do it. I've spent 15 years in sales and marketing in the tech industry. I understand tech, etc., etc. So it's just promise, and you have to sell promise. You have to get the right chemistry with the investors. It's very hard. You're going through it, right? The second fund is on markups. And I think sophisticated LPs understand that they don't expect DPI or returns, cash returns from your first fund when you're raising the second. If you have them, that's good. We had Redbus, in our second fund fundraising journey that helped. Our second fund became oversubscribed because of that. But that's not necessary. In the third fund, you have to show returns. Otherwise, your third fund doesn't happen.
Right.
Now, the Indian LP market is still maturing. I think Indian LPs still want to see returns and so on and so forth. But I think it will mature. Over time, they'll also understand that it is a long game. It is a game of patience.
Right.
You need staying power. You can't expect returns in this, from the first fund in the second fund cycle.
True. So how do they react in a bad market cycle? What really matters to an LP beyond the fund, giving returns? How do you convince them in a downturn? And you spoke about multiple instances of companies not doing well and then, taking the journey up. So how has that experience been? Can you share some incidents or stories?
Sure. So I think being open and transparent with LPs is extremely helpful in this process when you encounter a downturn and so on. Normally, downturns don't just happen suddenly. COVID happened suddenly and, a Savari or Movin Singh got hit suddenly. But normally, like we are seeing because of this war and so on, we are seeing some economic headwinds at this time, right? So being upfront and transparent with LPs in your quarterly reports, in your meetings with them and so on, that listen, these are the headwinds we are beginning to see. These are the companies that are likely to get affected with these headwinds. These are the steps we are taking to try and mitigate the impact on these companies, etc., etc. I think that helps a lot to tide over these downturns. Specific examples I'm not able to think at this point in time. But I think openness and transparency helps a lot.
Beyond this, do you feel that VC is more like a brand management and a perception management game wherein the deal flow, the LPs, everything is all about the perception? Because the real results of what you have done actually come towards the 8th or the 10th year, depending on the size of the tenure of your fund. So is it really about brand and perception management?
So it is your question, and I'm going to, I'm contradicting myself. I said there's no wrong question, but I'm going to correct your question slightly. It is not all about brand and perception. To some extent, brand and perception play a very important role in VC, especially in fundraising, especially when you're raising your first time fund. It plays an important role, right? How you convey what you're planning to do, how you convey your strategy, how you convey why your strategy will work to make returns for the LPs and so on and so forth. So their brand perception and all play an important role. But ultimately, if in the second fund you don't have markups from the first, and these are genuine markups, not marked up on paper yourself. Private valuations are very opaque. We have seen funds just marking up companies based on their performance and so on. But I think the prudent practice is if they've not raised a round external capital which has priced them, you don't mark them up and so on. So I'm
Right.
talking of genuine markups. And by the third fund, if you don't have returns, you're likely to be out of business.
So with this RDI fund coming into picture and there being a real need of deep tech startups coming out of India, I mean, SEDMAC is a fantastic example in itself. How do you see the VC ecosystem responding to this national requirement, for a lack of better word? Because I feel that, let's say, the AI story in the US versus the whole deep tech ecosystem in India, even that is not a comparison. So there is a requirement of capital. But when you go to the LPs, they are like 10-year fund, 12-year fund, we'll get this much in the public market, we can buy real estate, we have so many assets to put money in. How do you see this ecosystem developing? Is it a crooked story that cannot be fixed? Do you feel that the LPs would actually understand this subsequently? Do we need some more cases or stories which can really change the perception of the LPs? How do you see this thing happening?
So it's a great question, Saurabh. And my belief is that the RDI fund is absolutely transformative to the venture capital ecosystem. Even though it's deep tech and so on, it is extremely transformative. And let me tell you why, and also answer the question about LPs, real estate and all that. So I mentioned that between Acer Tech Ventures and Inventus, there was a failed fundraise that I was part of. I think the fund that I had teamed up with to raise their second fund, so it was not the first fund, they had markups, they had everything, but India was not in favor at that point in time, and there was no domestic capital. All capital had to be raised from outside. There was zero domestic capital, 2003, 4, 5 time frame. So India was at the vagaries of foreign investors who felt China is better, Indonesia is better, Vietnam is better, India is down, India is up, and you couldn't control anything. Over the last 10 years or so, I think the availability of domestic LP capital has been transformative. The SIDBI fund of funds, the institutions like HDFC who've raised fund of funds and have invested in Indian VCs, and many other such initiatives. RDI at 20,000 crores a year for direct startups, fund of funds and research is truly transformative. Yes, deep tech is a game of even more patience than other VC investments.
Right.
It's long gestation, it takes time to build the tech, and the outcomes are a little more uncertain than outcomes in other sectors. And I think RDI gives that patient capital. It will give belief to other LPs that, okay, if the
This can
government
be
of
done.
India or RDI is putting in this money, maybe there is a possibility that I should also put in money and things like that. So I think it's transformative. Mindsets change slowly. There's a lovely article written on LinkedIn by Vinod Shankar of Java Capital. I read it just 2-3 days ago, where it's very hard hitting. It is data based, and he's saying that Indian HNIs need to step up. We want India to become a developed economy.
Yeah.
We want deep tech, but with somebody else's capital.
And
I'll
risk.
negotiate I'll negotiate my third flat or third apartment, but I will not take the risk in
True.
startups. He's written a beautiful article. I think everybody in VC should read it, and it's really an eye opener for a lot of high net worth individuals.
LP trust compounds more slowly than investment returns, but it can vanish faster. So everyone loves innovation like a toy. Whenever you see and talk to people, yeah, this is fantastic, very fancy tech, this and that. I mean, I don't want to name dignitaries, they keep on posting on Twitter. But when it comes to procurement, they, take their hands back. Why is this mindset still existing, especially when you want the deep tech to go to a certain level? Why is there so much mistrust? And then how do you see this, changing subsequently? Because it's not a one-day story. I speak to so many founders, space tech, let's say. Let's take that as an example. So when they want to buy some ancillaries related to that space, there is nothing. And my conversation with the founders is that it is an even more lucrative business than actually building technology in terms of, getting the the right multiples in that. So, but then when you look at the industry, there is no procurement activity going on. There is no ecosystem which is being built, even though there is money with the private players. So how do you build in such an ecosystem? For how many days would you struggle? And I had a similar conversation with Manoj and Shibam when we were talking about Atomberg, and they face similar problems. So how do you see this space developing?
It is deeply frustrating, deeply frustrating. And I'm extremely critical of Indian corporates and buyers for their lack of ability to give startups a chance. I'm deeply critical, and I've been critical for the last 15 years. Things have changed, but things are changing only at an incremental pace. There used to be this saying when I was growing up, nobody got fired for buying IBM. I think every Indian procurement manager thinks like that. Startup, if something goes wrong, someone will question me and all that. And I'm one step removed from the founders. They are facing this struggle on a daily basis.
True.
But it is deeply frustrating. I think the only way it can change is when you see success stories. Now you have an Idea Forge, and I'm only talking about IIT startups, Sedimac and Atomberg and so on, coming out, becoming successful, that these old-fashioned procurement guys will begin to start thinking, okay, I could have bought from Idea Forge then. Maybe I should have supported them.
Samjhenge, karenge, that mentality.
Maybe mindsets will change, but on this aspect, I'm a super optimist in everything else. Here, I feel that it's going to be a struggle still for entrepreneurs. So they'll have to find markets outside.
Where do you think we are in the J curve in terms of deep tech coming out of India?
So I've always said that, this J curve is nice to talk about and so on and so forth. But India is a fallen hockey stick.
Okay.
So a hockey stick is a J, right?
Yeah.
Now imagine this hockey stick has fallen. So it's a long thing like this and the J is at the end.
Okay.
So there's a long gestation in India and then it takes off.
Okay.
Unfortunately, we are in the fallen hockey stick J.
Okay.
But, as success stories come, things will change. Every Idea Forge and every Sedimac makes 20 other people think that I can also do it, I should also do it, and I'll take the plunge. And then out of those 20 new people, 3 or 4 will succeed, and those 3 or 4 will make another 20 come out. So success will breed success.
Right.
And it will happen. And now capital is also coming.
So deep tech failure often comes from ecosystem gaps and not necessarily bad technology or bad startups. It is coming. Actually, to be honest with you, when we talk to family offices, right? And so there's a couple of things which are, coinciding. It's a play of time, I could say. So there's deep tech coming in, there's public money which is coming in, right? And at the same time, in the family offices, when you talk to those people, there's a second generation which is coming in, right? The people who have come out from the INSEADs, the Harvards, they want to do something fancy. They want to either expand their factories or try to understand how, what other things that they can do, because there is dispensable capital, right? So that is where I feel that even family offices or HNIs, ultra HNIs, they play a very important role in shaping up the story. And again, coming from your perspective, how do you see the private capital, playing a part in this particular story? How has their response been? Let's say you raised the fund for previously. What was the experience like?
So 15 years back, there was no domestic capital, like I said, right? Every capital had to come from outside. I think family offices have begun investing in this asset class over the last decade or so. And it's been a very, very important movement. So I only talked of institutions like SIDBI, RDI, HDFC Capital, some insurance companies, some banks becoming domestic capital available. But family offices have also played a critical role. And it is the younger generation. And, I'll say this very openly. My generation has been the most risk-averse generation ever, has been extremely risk-averse, let me say this. And part of the reasons for what you asked on procurement and all is because people of my generation have been sitting there and not procuring from startups and all that. But I think the younger generation is very, very different. People in their 20s and 30s today, people like you who will become decision makers in a few years from now are far more exposed, are far more open in their thinking, are far more willing to take the risk and say, okay, I bought from this startup, it didn't work out, so screw it. I made a mistake, it's okay. I don't care.
Yeah.
I will not worry about what my boss will say or what my generation suffered from that. I'm not blaming my generation. We grew up in an environment where society, where failure was a stigma.
Yeah.
Society really punished people who did not succeed. If I lost a job, it was very hard for me to get a job. So we grew up, when I say we, my generation grew up in that milieu, that environment and so on. The younger generation is growing up in a milieu where it doesn't matter. I've done startups. You yourself have done startups. It worked, it didn't work. There is more opportunity. Something will happen. I will do this. I will do that. I'll do the next startup. So they worry less. Their willingness to take risk is higher. So family office, whether it's family offices, whether it's people who get into procurement roles, you'll see a lot more of this generational change affecting some of these things.
So very bullish on the deep tech ecosystem in
I'm
India.
extremely bullish. If I was 25 years, I wish I was 25 years younger. I would have doubled down and maybe become an entrepreneur in the deep tech ecosystem.
That's what a lot of VCs keep telling me, that, it's the best time to be a deep tech entrepreneur instead of, getting into VC and doing things like that.
VC looks glamorous from the outside. It's a very tough business. So having been there 25 years, maybe that's why I'm expressing this vision. We are also entrepreneurs in some sense, but deep tech is so exciting. I mean, I look at our startups, Ati Motors doing autonomous robotics, Pixel doing hyperspectral satellites, SINE doing computer vision for robotic arms. The most proud moment for SINE was they exhibited at this AI summit, and there's a picture posted of Modi and 7 other foreign dignitaries, the French president and UN, this, that and all. 30 seconds was given to them. 4.5 minutes they've spent at their stall looking at this thing, picking up stuff, and a comment made by, I think, our Prime Minister, picked up a toffee and put it in the right place. He said, "Kha to nahi jayega." Look at the young entrepreneur, right? He's so, he's moved by
these kind of
people.
Yeah.
This was not imaginable 15 years ago, 20 years ago.
Absolutely. So if given a clean slate, how would you redesign the, let's say, for a lack of better word, policy, or what would be the 2-3 steps that you would take immediately to improve the situation of the deep tech startup ecosystem in India?
So maybe one is, I would make it easier to raise funds. You are doing Y-Point. I think you're going to see the regulatory, tapes you're going to get entangled with. I think we should do away with a lot of the regulatory tapes. Of course, it is a regulated industry. It should be regulated. It is other people's money. But AIFs were supposed to be light touch regulation. It's gone. It's heavy touch regulation. They're almost treating them like mutual funds. So I wish some of that would change and it would go back to a light touch regime. Second, I wish we could mandate, and I know this is wishful thinking, but I wish we could mandate that every large corporation above a certain size, and I say above a certain size so that if I procure wrong, it doesn't lead to my getting shut down, has to buy from startups. Now you can define certain standards for those startups to meet. But if you define that the startup should have 500 crore revenue, then what is that?
That's absolutely,
right?
yeah.
So define tech specs that should be met and so on. And then they should be mandated that certain portion of your procurement has to be from startups if they meet that criteria.
Right.
I think these are the two big things. So make capital more free, make procurement for startups more easy. And of course, I think compliance, most startups complain about the compliance headaches that they have to go through, ease some of those.
Right. So actually, to be honest, we did play a big role in getting the CSR into the entrepreneurship ecosystem. So a part of CSR can be given into the startup ecosystem. So that was something that was driven by SINE. So hopefully we'll make some more inroads in this.
Yeah.
So my last question for the day is, so we have RDI coming up, right? What other pan-India initiatives can be taken which would really transform deep tech ecosystem and take India on a global level?
A very good question. So like I said, Saurabh, RDI, I believe, is truly transformative. It is going to change the deep tech landscape and ecosystem. But any transformation of the ecosystem cannot be done with just a single input. So this is one big single important input. I believe the second big and equally important input is institutes like IIT Bombay and your Y Point Fund, IIT Madras and their fund, and other such funds coming out of successful incubators will be the next transformative thing for deep tech. And the reason is that even though you've had a good track record, when I say you, SINE has had a good track record of SEDIMAC, IdeaForge, who have managed to bridge the gap between incubation and raising venture money, there are many more startups that could have benefited. You could have had more SEDIMACs and IdeaForges and Atombergs had funds like Y Point and IIT Madras's
Absolutely.
fund become available. And I think that's going to change. It will also lead to more professors coming out and taking the risk of getting into startups. It will lead to many more bridges being built, and then other venture money coming in to support the startups that you've invested in. Because
Right.
if I put my VC hat on, if SINE has incubated a company, that's one thing for me, right? A certain comfort factor. But you've not put your money behind it,
True,
right? You've incubated, you've provided mentoring, guidance and all that. Now, you've not only incubated a company, but you've put your money behind it.
Yeah.
Gives me even more confidence to take the risk.
Right.
Even if the startup is not fully at the stage that I would have liked to see, I'm willing to probably take the risk, saying SINE has seen it, they've put their money, and maybe it's a bet worth taking.
Makes sense.
So I think it will be very transformative.
Great. So thank you so much for your time today, Samir. This has been really, really insightful. And I wish a lot of our VC friends and the entrepreneurs see this podcast to really understand the ecosystem, understand the views of a person who has spent more than 2 decades in the ecosystem. And I really would want you to be here one more time when we do more investments and we want to learn more from you. And I would really like you to be on the show again. Thank you so much.
No, thank you, Saurabh, for having me on the show. Thank you for all the questions you've asked. I don't know what I've learned in 20 years or not learned, but there's phenomenal amount of learning left as well. Happy to be part of this journey.
Sure. Thank you so much.
Thank you.